Hello, my name is Ed Burnett. I am a retirement income specialist with the Schaeffer Financial Group. I work with a team of professionals here at the Schaeffer Group, and we help people with their retirement income planning. So I'd like to talk today for a minute or two and share with you a presentation that we call the Circle of Life, where we talk a little bit about how it works once a retired couple has passed on. A lot of our clients have done a really good job at saving for retirement. And when I'm talking with those households, one of the questions that I ask them is, someday, Mr. and Mrs. Client, when you're taken out of the picture, when you're no longer here, when it comes to your kids, your grandkids, churches and charities, would you rather that they get as much as possible or whatever's left over? And then I wait for them to answer the question. Let's take a second and explain to you what happens when you do pass away and you've been a good saver. There are three potential beneficiaries for your IRA assets when you pass away. You could have your kids and your grandkids, you could have a church or a charity, and then you have the IRS. Of course, we're in a partnership with Uncle Sam on all this money, right? Well, your kids and your grandkids with $1 million IRA account, they're going to inherit about $600,000. Your favorite church and charity is going to inherit zero, and the IRS, unfortunately, is going to get $400,000 of your hard-earned account. A lot of people are very surprised when we detail how the beneficiary designations are going to collect their proceeds. So we introduce a potential legacy plan that a lot of people have a lot of interest in. What if I told you that the kids and the grandkids upon your death could also get $1 million tax-free? Your favorite church or charity could get $1 million tax-free, and the IRS would actually get nothing. Is that something you'd like to learn a little bit more about? At some point in time, the IRS requires that you make distributions from your retirement accounts. Your IRAs, 401ks, 403bs, they've never yet been taxed for income purposes, so the IRS says once you get into your 70s that you have to begin to take what's called a required minimum distribution, or an RMD. Now, your first required minimum distribution is about 4%, so on $1 million, that's about $40,000 that you're required to distribute. You'll have to pay taxes from that distribution, and then you'll have some sum of money that's left over after you've paid the taxes. And you'll ask me, Ed, what should I do with this money after we've paid the taxes? Well, you could spend it. You could give it to the kids or the grandkids or the churches, the charities. You could go on a trip, whatever you want. Or you could use some or all of that money to create what we refer to as a legacy plan. With this legacy plan, you can use those dollars to fund a program that ensures your lives, and upon your death, it might create up to $1 million in death benefit. Now, this is technically called what's called a second to die life insurance plan. So it's a life insurance policy on 2 lives. And with that $1 million death benefit, you're now going to list the kids and the grandkids as the beneficiaries on that life insurance policy. Mr. and Mrs. Client, can you tell me, what do kids or grandkids pay in taxes when they inherit life insurance proceeds? The answer under today's tax laws are zero. If you're very charitable and you would love for your church or your charity to get as much as possible, then you could list the beneficiary for the IRA to be your favorite 501c3. Mr. and Mrs. Client, can you tell me, what does a 501c3 pay in taxes when they inherit an IRA account? Under current tax law, the answer is zero. So if the IRA is empty, then the IRS has nothing left to collect taxes on, and they would receive zero. So again, when it comes to kids, grandkids, churches and charities, when you're taken out of the picture someday, would you prefer that they get as much as possible or whatever's left over?